Hey everybody, it's Jen and Adam back with another market update. Adam, big news this week from Freddie Mac as the average on the 30-year fixed rate mortgage dropped again to another historic low. That is a big deal.
It is a huge deal, and it is the 17th time that we have had an average rate below 3% on a 30-year fixed loan. It is truly a remarkable time if you are trying to lower your cost of credit and refinance, or buy that home that you've kind of been keeping an eye on. Maybe you need to upgrade, downsize, buy your home for your first time. This is, when it comes to pricing of interest rates, this is a historic moment for you. Now, what you have to keep in mind though, is everybody knows that. And so homes are moving really fast, right? And so inventory is only at about 2.5 months. That means that if everybody went out and bought a house in 2.5 months, we would be completely out of them. They would all be sold. And so that is not very much. You really would like that to be like 6 to 9 months, ideally. And so that means there's pressure on prices. Prices are going up when it comes to buying a home. Little bit of good news to offset that. Builder confidence is at a high. It's at a 90 on a 100-point scale. So that means builders are excited about building more homes, and that will help with the inventory. Of course, Jen, underlying all of that is still this economic situation that we find ourselves in, where middle of a pandemic, political uncertainty, and that means markets are just kind of all over the place.
Absolutely, Adam. The Dow hit an all-time record high, almost eclipsing the 30,000 point mark. They were only 50 points away from that, which is incredible. And that happened Monday on the news of not one, but 2 potential vaccines coming from companies with high efficacy rates. The sell-off that happened Tuesday and Wednesday is because we are still seeing a very high number of infections happening and being reported. And now states like New York and California are reinstituting some lockdown protocols. So that has taken the stock market back down. Also bubbling underneath the surface here is a battle that's developing between the Federal Reserve and the Treasury Department. The Treasury asking for the money back from the CARES Act, about $455 billion, saying, hey, if you didn't use it, give it back to us. We want to give it back to Congress to reallocate. And the Fed is kind of fighting that. So there's a little bit of a battle there that's also causing a little bit of uncertainty. Big deal though, Adam. People just aren't spending money right now. Retail sales were down. That is affecting the market as well. 10-year Treasury note, the yield almost got past 1%, but then it dropped back down pretty quickly with the sell-off. So keep an eye on the markets. There's just going to be a lot of volatility for the next couple of months until things can start to smooth out a little bit. But there are more details and more information on this right now inside the Market Update blog on movement.com/blog.